So hello and good morning. I welcome you to the morning meeting today on Friday, the 23rd of March 2018. This is Jens Klatt speaking, exclusively presenting this format to you for JFD brokers. As usual, we want to have a look at the markets, and things start to look bad for US equities. Not just US equities, but in fact mainly the DAX, which is trading lower and eyeing, I think, the region rather sooner or later around 11,730 points, current region of the February and yearly lows so far. And it's not only that, the DAX is under pressure, but also US equities have seen some bigger losses yesterday. And I'm not sure whether we are already done on the downside, even though right now, let's have a look at the DAX here first. It looks promising. Somehow promising that the market can now reduce its momentum here on the downside. 1 second, please. Okay, here I'm back again. So the market can stabilize a little after seeing some dynamic on the downside in the morning. Now can make back nearly 100 points. Volatility is back. But the thing is that even though that might look to some traders now promising, and probably they are about to call out a potential bottom here, I think a retest of these lows respectively here, the region around this exponential moving average 50 on a 5-minute time frame, around, or let's call it everything between 11,910 and 11,930 points is potential short trigger. I think an intraday short trigger instead of a point where to really cheer up and now think that the overall picture lightens up again. So let's just see if the DAX can continue to make back some of the losses here, even though all in all the overall picture does not look promising at all. But with the break below 12,100 points, 130, 130 points. The first target, in fact, was or could be seen around 11,000, around 12,000 points. And not only that, but we made it below that level yesterday then and overnight and dropped even further. And so the overall picture looks very, very bearish now, even though we are still neutral. But when looking at the daily chart, another or at a higher time frame here, that what we can clearly see is that the DAX is about to test this region, which I already mentioned here, and everything below 12,470 to 500, probably also 12,600, 650 points should be considered bearish. And there's a rising chance that with a push below that level, there will further there's further downside to be expected, which could push us minimum to 11,450, if not 10,800 points in the upcoming week then. And so with this on the agenda, I'd be really careful in now seeing any long engagements here, but in fact would go with this clear trend. And probably expect some further downside, even though we have now pushed ourselves here over 100 points from the intraday lows, with US markets opening. And when looking at the Dow Jones, for example, what you can also see here is that there's still some room on the downside. So we've seen yesterday a very bearish candle, in fact, and I think this alone justifies to be skeptical for long engagements. And as you can see here, I think there's a good chance that we'll get to see a test of this blue line, which is the 200 simple moving average, probably also a slight push below that level, a retest of the lows here from February. And with that said, if we go short from here to test this region, we get to see similar losses when looking at the absolute points here. So 600 to 700 points, or we have potential for 600 to 700 points, another 600 to 700 points on the downside. And when looking at the DAX, I have to say that compared to the Dow Jones, which is still fine, let's say, so we're not ultra bullish, but it's not that we're ultra bearish either. But it's more like a consolidation right now. It's a choppy market environment with swings on the up and on the downside. Nevertheless, the DAX I think has definitely some room here, some further room on the downside. And if the US equities show such weakness as described, then there is a very good chance that the DAX can push towards 11,730 points here, and probably push us. Probably today. I don't want to be one of the horsemen of the apocalypse here, but it's definitely possible that we're not yet done here. And that said, be really careful when considering any long engagements here. Now in the current region, everything below the exponential moving average 50 should be considered skeptical. We have seen an attempt to make it back above this already yesterday. It was a very sharp reversal. In fact, that was a reversal which stopped me out of the rest of my positions. I scaled out on the way down here in the DAX, and I was like, well, that looks promising. But the thing is that after the market made it back above this 50 exponential moving average here and started another attempt to attack this region, based on, by the way, a retest of this region here, it failed. And in fact, it just lost some further ground and made new intraday lows. And that's definitely something to consider when going or seeing chances for a huge reversal here. Could be that it's just a retest, or probably we see a slight push above that and then we go down again from there. But all in all, be really careful when considering long engagements, since they are they are definitely anti-cyclical, considered to be anti-cyclical for the trading day. The good thing is we have equities, because what we get to see right now in the currency markets, especially Euro USD, for example, is not very promising. In fact, let's just skip it because it doesn't make sense to talk about this choppy market environment. The most interesting currency pair right now, I think, is dollar Japanese yen, which fell below 105. 105.50, 105, and is probably about to see some further losses, which could drive us as low as 100 in the upcoming weeks here. So also here, I said be really careful with long engagements in general, because it doesn't look that promising what the dollar Japanese yen provided here. The first small attempt probably to go long could be seen if we make it above 107.50 to 108. Instead, we broke on the downside and fell below 105 now. I myself had said that I don't even like long engagements below 110.50, but now I brought up a very fundamental idea here, which is also something to take into account, because let's have a look here at the current account to GDP in Japan. So we're talking about tariffs, we're talking about potential trade wars, and now what I did is, in fact, and by the way, this is already Japan in blue, and here the black dotted line is Germany. Let's have a look here at the current account to China. Current account to GDP China. So now the black dotted line is China. What you can clearly see is similar to Germany, that there's a huge gap. And when you look at the first page here of Bloomberg today, you see global response after Trump announces new tariffs against China. So Trump is right now really attacking China with his protectionism and tariffs. And the thing is that if you look at this number, current account to GDP here, Japan, for example, but also Germany are something to really worry about for Donald Trump, and probably we should await an attack here from the White House rather sooner than later. Not just to Germany, which could also, by the way, push the DAX lower here, but also probably against Japan, where then dollar Japanese yen is about, and probably is about to make it already or show it already, is about to lose some further ground and probably push towards 100. And here things are getting interesting then, because the Bank of Japan could say we will definitely hold dollar Japanese yen above 100 Japanese yen, because we don't want to risk our inflation target of 2% here. And we fear that if dollar Japanese yen drops again below 100, that here such risks occur that we could see some headwinds or some negative impacts, let's call it, for our economy. And we've already seen in 2016, that was before the election of Donald Trump, we have seen that dollar yen here has found quite strong support around 100 Japanese yen. I wouldn't be surprised to see similar a move here again. And that said, I think dollar yen has some further potential on the downside from this perspective, but I wouldn't be surprised to hear rather sooner or later Bank of Japan stepping up and trying to down talk the Japanese yen again and push dollar yen higher than here, which could, trigger a new wave of fears around global protectionism, fears around economic growth here, and which then in the long run weighs more heavily on the equity market. So I mean, if the BOJ steps up, or also the ECB delivering more asset purchases or more QE in some way, well, this could at least short term stabilize equity markets. Nevertheless, chances are still given that it's only a short push on the upside, only to see an even sharper drop afterwards here when trade war fears start to rise again. In such a market environment, obviously gold is performing really well. So we now made it towards and also slightly above the March highs. And if this is a sustainable break, next target again is 1,360, 1,365 USD per ounce. And with this said, this is a crucial level on the upside. If we make it above that level, that's a long-term bullish sign for gold and could easily drive prices higher up to 1,000, probably 600, 1,700 USD per ounce in the upcoming months to 2 years here. So, and so far, I have to say, especially with fears rising at many in many aspects. For example, you have already seen it here. Having a look at the LIBOR overnight index swap rate spread here, it's a very, very good indication to see the current, let's call it, health of the credit market. And it's very interesting to note that we see a spike here, and currently it's explained with the Fed hiking rates, short-term rates a rise, respectively a reduction of the balance sheet. Well, I think that's very, very conservative / probably naive way to interpret such a spike, especially when looking at the performance of bank stocks currently. So Deutsche Bank, for example, is dropping like a stone. Same is true for Goldman, Morgan Stanley, CS, so Credit Suisse or UBS. And with this in mind, I think this could trigger some further doubts if there's not a new probably financial crisis, or let's call it credit crisis, brewing below the surface, and that this could also trigger some further volatility, respectively some further action on the downside. So to put all this together, I'd be really, really careful with long-term long engagements here in the DAX especially. Told this several times in the past, but want to repeat it here. If I had a well-diversified and big portfolio of stocks here, I definitely look for insurance, buying insurance here in the current region, because if we drop below this level, the overall bullet structure of higher highs and higher lows is definitely broken. So we have already created some doubts here, let's call it, from a technical perspective, after we dropped below the simple moving average 200, but with a drop below 11,900 points, a sustainable break below that level, further downside should be expected, and it's a clear bearish sign then. And there are several reasons to be really skeptical about equities right now. Again, be really careful with intraday, also short-term long engagements, even though that looks kind of promising right now. Be really careful. It could be it's only a retest here, and from here we see at least a new test. I'm not saying we're breaking the lows here around 11,830 points, but I think there's at least a serious chance with US markets opening and probably seeing some pressure there too. So be really, really, really careful, I think. And yeah, so that's it from my end. Happy trading. Watch your stops. Talk to you again tomorrow at no, I'm sorry, tomorrow is Saturday. No, on Monday, 10:30 a.m. GMT. And yeah, that's it from my end. So have a nice weekend. Take care. I wish you all the best for your trading for the rest of the trading week here, the last hours of this trading week, and stay tuned. Yes. So that's it from my end. Happy trading. Watch your stops. Take care. Talk to you on Monday. I look forward to it. See you, and bye bye.